The world of investment can be exciting and fascinating, and with the advancement of technology, the scopes for you to invest are getting much easier. So if you're considering starting your investment life, one man's got some advice for you on investing the first $10,000.
Started building this little snowball on top of a very long hill. So we started at a very early age in rolling the snowball down. And of course, the snowball, the nature of compound interest is it behaves like a snowball of sticky snow. And the trick is to have a very long hill, which means either starting very young or living to be very old. I would do it exactly the same way if I were doing it in the investment world. I mean, if I were getting out of school today and I had $10,000 to invest, I'd start with the A's. I would start going right through companies, and I probably would focus on smaller companies because I would be working with smaller sums and there's more chance that something is overlooked.
So let's break down the advice of this super successful investor. So the main aspect of this advice from the Oracle of Omaha is to use the first $10,000 in compound interest. What is this compound interest exactly? As Benjamin Franklin put it, money makes money, and the money that makes money makes money. In simple terms, compound interest means that you begin to earn interest on the interest you receive, which multiplies your money at an accelerated rate.
Einstein is reputed to have said that compound interest is the eighth wonder of the world or something like that. And it goes back to that story you probably learned when you were in grade school where somebody did something for the king and the king said, "What can I do for you?" And he said, "Well, let's take a chessboard and put one kernel of wheat on the first square and then double it on the second and double it on the third." And the king readily agreed to it. And by the time he figured out what 2 to the 64th amounted to, he was giving away the entire kingdom. So it's a pretty simple concept, but over time, it accomplishes extraordinary things.
To understand this, you have to understand the difference between simple interest and compound interest. Simple interest is calculated based only on the principal amount. Earned interest is not compounded or reinvested into the principal. Let's say that you've invested $1,000 with a 5% compound interest option, while your friend chose the same percentage of simple interest. Now, with the simple interest, your friend will get $50 every year. Now, as you chose compound interest, you'll also get $50 every year, but in your case, this interest will be added back to your principal, making your total investment $1,050. So in the second year, you'll get 5% of $1,050, which is $52.5, which again will be added to the principal, which was $1,050, making the principal of the third year $1,102.5. The first time I understood this concept, I was like, what the math? In the short term, the impact of not reinvesting your returns may seem insignificant, but if you stretch the time frame to 30 to 40 years, the result can be really massive. So let's continue with the aforementioned example to make the power of compounding more clear. But this time, you and your friend decide to invest the first $10,000 and you went with 10% compound interest while your friend chose simple interest again. Let's take a look at the result it will have after 30 years. Your friend with 10% simple interest will get $40,000 in total, and in your case the amount will be around $175,000, more than 5.5 times your friend. And that's not the end. We've shown you the calculation for only one interest rate. Scale up the interest to 12% and after 30 years you'll have around $300,000. Just a 2% spike in the interest rate can make a massive change. Imagine the impact of 20% interest rate. Now, that's for $10,000. Imagine what it would mean for an investment of $100,000 or $1 million.
On this March 11th, in a couple of weeks, it'll be 77 years since I bought my first stock. And I paid $114.75 for 3 shares of City Service Preferred. But if you'd been a pension fund and you put $1 million into the S&P 500 at that time and reinvested it, during my investing lifetime, that million would have turned into $5.3 billion. You would have gotten, for every dollar you put in, you've gotten over $5,000 without ever reading a headline, an annual report. You didn't have to know accounting. You just had to believe in America. And you didn't have to pick the right stock. You just picked America.
Yes, now it's your turn to say, what the math? So even if all of these calculations can make many people's heads spin, it gives us one lesson. When choosing your option, you have to go for the companies that offer the highest interest rate. But how can you find those companies? Buffett already answered that.
The same way if I were doing it in the investment world. I mean, if I were getting out of school today and I had $10,000 to invest, I'd start with the A's. I would start going right through companies, and I probably would focus on smaller companies because I would be working with smaller sums and there's more chance that something is overlooked.
The reason is quite simple. The bigger companies are well known and more people are willing to invest in them. So the chance of them offering a higher interest rate is quite low. It's like when somebody's selling a car, if you're among one of the 100 interested to buy that car, the chance of you getting a good deal is pretty slim. But if you're the only one interested in buying that car, the owner will definitely cut you a good deal. So how to find good small companies to invest in? By using stock screeners. There are a lot of online stock screeners available. Go to any of them and find the companies with low market cap. 50 to 300 million could be a good range. Then find the companies with a good PE ratio, and a range of 1 to 10 could be a proper range. With this, you will have a list of small companies that are undervalued. Study the companies you like the most to find out if it has the potential and invest away. You're young and want to get rich? Warren Buffett's got some advice for you. Watch the next video to know that. See you in another video, Surefire gang.